Hey everyone, welcome back to the channel. I'm Sam and today we're going to break down something super important for all you traders: how to read and interpret trading charts. Whether you're just starting out or you've been trading for a while, understanding charts is key to making smart moves in the market. So stick around because we're covering everything from the basics to some pro tips. And as always, drop any questions or thoughts in the comments below. Alright, let's get into it. So what exactly are trading charts? Simply put, they show you how a stock or asset's price has moved over time. It's like getting a snapshot of market behavior to help you figure out what's coming next. If you can read charts, you're already a step ahead in developing a solid trading strategy. Types of trading charts. First up, let's talk about the types of trading charts you'll come across. There are three main ones: line charts, bar charts, and candlestick charts. Line charts. These are the simplest. They just connect the closing prices over time with a line. It's easy to see the general trend, but you won't get much detail on what happened during each day. Bar charts. Bar charts give you more info. Each bar shows the opening price, the highest and lowest prices, and the closing price for a set period. This can be great for spotting daily ups and downs. Candlestick charts. These are probably the most popular type, and for good reason. Each candlestick shows the opening, closing, high and low prices, with different colors for whether the price went up or down. It's super visual and easy to spot trends or patterns. Candlestick charts are pretty much the go-to for traders because they give you a ton of information in a quick, easy to read format. Support and resistance. Alright, let's get into support and resistance, two terms you'll hear all the time when talking about charts. Support. This is like a safety net for the price. It's the level where the price tends to stop falling and starts bouncing back up. Resistance, on the flip side. Resistance is like a ceiling that stops the price from going higher. When a price hits resistance, it might drop back down. Knowing where these levels are helps you figure out good times to buy and sell. Key patterns. Now let's move on to patterns. Charts have all kinds of patterns that traders use to try and predict what might happen next. Trend lines. These are just lines you draw on the chart to show the general direction a price is moving. An upward trend line means the price is moving up, and a downward one shows it's moving down. Head and shoulders. This one's a classic. You've got a peak in the middle, the head, and two smaller peaks on either side, the shoulders. When you see this, it usually means the trend is about to reverse. Double tops and bottoms. A double top happens when the price hits a high point twice and then starts to fall. It's a sign the uphill trend is losing steam. A double bottom is the same thing, but in reverse, signaling a potential upward move. Recognizing these patterns can give you a heads up on what might be coming in the market next. Technical indicators. Now, patterns are great, but to really sharpen your trading skills, you need to know some technical indicators too. Here are a few of the most popular ones. Moving averages. These smooth out price movements so you can easily see the trend. For example, a 50-day moving average shows the average price over the last 50 days, giving you a clearer sense for the long-term trend. Relative Strength Index, RSI. RSI tells you if a stock is overbought, above 70, or oversold, below 30. If it's overbought, it might be time to sell. If it's oversold, could be time to buy. Volume. This one's simple but powerful. Volume is the number of shares or contracts traded. If a lot of people are buying or selling, it confirms that the price movement is strong. Combining these indicators with patterns can give you a full view of what's happening in the market and help you make better trading decisions. Putting it all together. Before we dive into how to put everything together, don't forget to hit that like button if you're finding this helpful, and make sure you subscribe to our channel for more insights, trading strategies, and pro tips for smarter trading. So how do you put all this together? Let's say you're looking at a candlestick chart for a stock. You notice a clear support level where the price has bounced a few times. At the same time, the RSI shows the stock is oversold, which might mean it's about to bounce back. Then you check the volume, and it's increasing, which means that more traders are jumping in. By using the chart this way, you're able to make a more informed decision about when to buy or sell. It's really about combining these tools, patterns, indicators, and trends to give yourself the best shot at making a smart trade. Well, that's a wrap on today's breakdown of how to read and interpret trading charts. Hopefully you're ready to put this knowledge into action. Be sure to check out these other videos we've handpicked just for you. Thanks for watching, and I'll see you next time.